Hi everyone, this is Jason Barak of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He worked as a corporate lawyer on Wall Street and for large corporations. He was an executive for a Silicon Valley company. Louis Cammarosano, thank you for joining me.
Oh, thanks for having me, Jason. Lawyers get, because they have a monopoly in a sense, because you have to be a member of the bar, just like doctors, the American Medical Association, they do get paid a lot of money.
Yes, they do.
And they can charge it. And if you have corporate clients, they have a corporate budget for it. So then they can, it's kind of not as free market as you might imagine, because if you're in a large law firm, they all kind of charge what the others charge. So you have this oligopoly, and in those structures, they can basically all charge about the same amount.
Okay, well, we can talk about your background as a lawyer later in the interview. You also worked in Silicon Valley at a company that was actually making money, unlike some of the ridiculous stuff now we see with the Snapchat IPO and how Snapchat looks like it's going to be valued for more money than eBay is, even though eBay is, a profitable company and very important to e-commerce. But let's talk about that later in the interview. First, let's talk about President Trump. He's been in there over a month now. I think he's done some good things. I didn't vote for Trump. He's really going up against a lot of corruption, a lot of people who hate him, Democrats, Republicans, bureaucrats, and yet, he's managed to, on the good side of things for Trump, he's managed to put in a Supreme Court justice who will stick to the Constitution, supposedly. He does have some good ideas with repealing regulations. It looks like he's going to try to help Main Street businesses with tax cuts for small and medium-sized businesses. So there is some positives for Trump. Is there any more positives you've noticed about Trump? And besides positives, we'll talk about the negatives after that.
Well, I think the biggest positive is basically his willingness to stand his ground and give his position, and to combat any time he believes he's misquoted or misunderstood, which makes for interesting political theater. But it also, I think it starts to take away the political correctness which has stifled political debate, because prior to Trump, as we were talking about this earlier with the Republicans, they were afraid to take firm positions, whatever their core values might be or what they're supposed to be, whether it's free markets or keeping the border secure. They were always afraid to hold hardline positions, even if that's what they believed, because they were concerned that those positions could be deemed sexist, racist, or whatever politically correct tag can be thrown at them. So therefore, they changed their positions, they modified their positions, and at the flip side, that's very effective if your opponent can make you be afraid of your own position. And that's how the Democrats were very successful in making the Republicans more like Democrats. And that's where, Ronald Reagan ran, he didn't run from the center, he ran from the right, and the Republicans are always afraid of doing that because they got their butts kicked with Goldwater in '64. But Reagan kind of emerged from that and stuck with the conservative message and was able to sell it because he was consistent, at least when he was running for president, on the conservative message, and he got elected on that basis. And Trump seems to be not only have run on whatever, I'm not saying he's got a conservative message, he's got messages that are all over the board, but he continues to stick with them. And whatever he did during the campaign and said during the campaign, he's doing exactly the same thing. And that's annoying a lot of people, but he's not backing down from the things that he said on the campaign trail. So that's what I like about him. I'm not saying I like what he's saying he's going to do or what he's doing, but the fact that he's actually doing it is putting people off guard, because they can't kind of change him or mold him by calling him a name, because he'll just call you a name right back.
I really respect him for having to put up with all the name calling and the insults. You brought up that interesting point about the PC culture. I mean, it's gone to the point in the United States, it's really not fair. I mean, you try to have an honest conversation about the U.S. national debt, how there's so much corruption in government agencies, Republican and Democrat, how there's money, we're spending money we don't have now, whether it's for the warfare state or the welfare state, whether for so many other things in government spending. And yet, you have the Democrats now, and they've controlled this narrative against the Republicans for a while. A lot of the Republicans haven't had a backbone. And the Democrats, instead, when the Republicans would try to mention facts about why we can't afford this program or why this has to be cut, the Democrats would just immediately start going into character assassination, name calling, saying, oh, you're a xenophobe for wanting to do this, for not wanting to give, welfare programs for all illegal immigrants or sanctuary cities, or you're a misogynist for wanting to cut these programs for women or anything else. And, immediately for wanting to cut any kind of money, you're already, a racist, a sexist, and a xenophobe.
And you don't like children.
Yes. So you cannot have an intelligent conversation where the country is in dire straits financially. This is despite Dow 21,000. We didn't close at 21,000. We were up at 21,000 earlier today, and then we dropped back down. But this is with S&P 500 total valuation around 20 trillion, and our debt is about 20 trillion. So, the stock market is not reflecting the reality of the situation. President Trump is trying to, I think, the main platforms, one of the main reasons he was elected was on, Obamacare, reducing that. The average American family, the increase in healthcare costs, they just could not afford them. And so that was an important issue. And the other one was jobs in the economy. And I think that's what gave him the edge over Hillary Clinton. And we know this from the exit polls. This is not, me making a guesstimate here. This is from the exit polling from people who actually voted.
Well, if you talk about a negative, one negative of Trump certainly is he's trying to attach his star to the stock market. And he was very critical of the stock market when he was running for president, called it a big bubble, said Janet Yellen should be ashamed of herself. It's a disgrace what she's done by keeping interest rates so low. And he called it a big bubble, believe me. And now it's a huge bubble. And because it's gone up more than, the start of any other president, he's kind of getting the hubris, which could be his downfall. He's starting to say, look at me, I'm great because people believe in me. That's why the stock market's going up. That other thing was a bubble, wasn't based on anything, but this is now based on me. However, what he's not taking into account is that the stock market, if it's at a bubble and rises from there, it doesn't matter how great you are, it's already past its sell-by date. Yeah. So the mistake he's making is attaching himself to that stock market. And I had thought that what he would do is when the stock market goes down, he would kind of rely on the fact that his economic plan, if he thinks it's going to work, was working, people are having jobs, they'd be less concerned about a stock market as a barometer of the economy. But he's now made it a barometer of the economy. So if the stock market goes down, he's going to have to do the old tricks, and he's going to have to call together the Exchange Stabilization Fund. He's going to have to bring in the plunge protection team and see what they can do to boost it back up to gain confidence in the economy, because he's made the mistake, I think, of saying that the stock market is reflection of the economy. And most of us, and he included, prior to the election, we're saying that the stock market is not reflective of the economy. It's not reflective of the strength of jobs and wages and growth, because it's not. We've had sub 3% GDP for the last 8 years, and yet we've had the biggest stock market rally in history. And with the Federal Reserve, printed $4.5 trillion to get that growth. So they basically spent almost as many dollars to get the GDP growth, which is already made up because they include things like your electric bill, and they include things like Hollywood contracts that never actually get made into movies. There's a lot of fluff in the GDP, even so. And yet, despite no GDP growth relative to prior decades, the stock market went up more than ever. And now it's going up kind of in a straight vertical line. And Donald Trump's sitting there cheering that on.
Louis, there's also been well over $1 trillion in share buybacks since 2009, thanks to artificially cheap debt from the Federal Reserve. And, not only is that a problem with central bankers creating, artificially cheap money and credit, but that's a problem with corporate governance as well, where the incentive structure for the CEOs and upper management and board of directors is not aligned with the long-term interests of employees and shareholders to create value for the company for win-win-win scenarios. But I think
excuse me, actually it is, it's the stock market is willing to give value to those types of moves. So you talked about Snapchat at the top of the hour. Snapchat doesn't make money. Even said today they probably never will make money. But that doesn't stop the market from valuing these companies higher. So when a CEO or its board of directors decide they're going to buy back shares, that actually does help shareholders because they have no other use for the money because the economy's not doing well. So they're not investing to meet the demand of customers that isn't growing. So it actually helps shareholders because the stock price goes up. Everyone makes money who's in the stock market. And as long as the price of the shares goes up, even if the company's really not doing well, isn't improving its revenues, isn't improving its profits, if the stock price goes up, management gets paid because the stock price goes up. And investors are in this game to make the stock price go up. And this is what you mentioned also earlier, that I ran a company that was making money. That doesn't seem to be valued by Wall Street. They like companies that have been out. One of the companies that I worked as competitor against is Zillow. They still haven't made any money over 12 years, but that doesn't prevent the shareholders from bidding these companies up to 6, 7, 8, 10 billion dollar market caps. And Snapchat will go out and profit doesn't matter. And if they get, I don't know, $400 billion in their IPO, I don't know how much they're going to raise. And if they have to use some of that money to buy back shares and the share price goes up, in their minds, everybody wins. The loser is not even the shareholders. The loser is an economy based on common sense. How can you value companies that won't make money in the billions of dollars?
Well, the technology stocks are valued differently than normal regular companies. They're normally just valued on revenue growth and user growth rather than, free cash flow and the normal valuation metrics that you'd use for a regular business. So
sure,
that's
but you still eventually have to make a profit. And one of the things I know these companies do, they buy revenue. They buy revenue with their IPO money.
Yeah.
So even if they have to go and put more in sales and marketing, like 1.3 to $1 revenue, they have to spend $1.50 to make $1 in revenue. If they do that properly, they could show decent revenue growth and the share price will go up. And if the share price keeps going up, they could do a secondary offering, raise another $100 million, and then buy more sales and marketing to grow more revenue.
Well, that's what Amazon does, right? So most of Amazon's businesses are not profitable. Their warehouse business with selling items, they make paper-thin margins, but no one can compete with that. Their other businesses, though, are not making any money and they're just growing revenue. But they've been taking advantage of their higher and higher stock price, and they keep selling more and more shares. Right. And management and a lot of their best employees are paid 50% stock, I believe.
Correct. And then what they do is they try this accounting. They say, well, we would be profitable if we didn't pay these people all this money. Well, they wouldn't be working there if you weren't paying them all that money. Because if you had to pay them out of profits, they wouldn't make a bonus. They wouldn't make any money. But they're paid because the stock price goes higher and they have stock options that they can then cash in and make more money.
It sounds like a sophisticated scheme to me, but it's, I guess, technically legal because no one's gonna sue Jeff Bezos and say, you're not running your company properly because look, the stock's going up.
Exactly.
But, about the share buybacks, the point you made, in the short term, it may create value. I think we should make a distinction, though, that there's a big difference between using free cash flow at your underlying business with the fundamentals to buy back shares if the stock price is cheap and taking on enormous amounts of debt and loading the balance sheet long term with debt that is very burdensome and long-term can make the company, lose its credit rating, stuff like ExxonMobil. I don't know if you saw this, but a lot of the large cap oil companies since 2011, their costs have gone up 66%. That's with the oil price falling. So despite the oil price falling, they haven't been able to cut their costs. So they have a situation where the oil price is lower since 2011, and yet their costs have risen 66%, and yet their balance sheets have even more debt, and they've done tons of share buybacks, and their credit ratings have been downgraded. So
you're in the worst position when you buy back by borrowing, but even buying back, if you're buying back shares just because you have cash, and if you don't make any money, and you're trying to argue that your shares are undervalued, that really doesn't make sense, because if your company loses money, and you think your shares are undervalued, you're lucky you have a valuation anyway. If you've been in business 10 years and you don't make any money just because you have a lot of cash, really is the best thing to do is to buy your shares back? Well, the answer is yes, it is, because then the shares will go up and everybody will be happy. But then you're not investing in the business. Now, what this means is for companies that spend marketing and sales expense to buy a dollar of revenue, if that revenue doesn't stick, all they're doing is throwing money away just to boost the share price, and it doesn't have any long-term impact. If they don't put their money into R&D, they don't put money into their employees, then they're not building the business. They're building the share price. Now, what this all means is that other companies can come along and do a better job, more profitable. But you know what? A company that comes along and does that and does it profitably but doesn't show revenue growth but shows profit, Wall Street's not interested in that. And without Wall Street sponsoring that type of company, they're not going to get the money to really compete. So all of these companies, it's interesting, they are ensconced in their position as market leaders. For example, Twitter. Twitter should be ripe to be taken out because they run a company that loses money and actually chases away people from its platform. It bans them, it censors them, and you would think, well, then that's the dumbest thing a company can do when they're losing money because they're losing users, they're getting a bad name. But it's hard to compete with Twitter because they have a cash hoard and they can keep themselves in the game and they can keep others from coming in. Now, you can set up a competitor to Twitter. It's going to cost you a lot of money, but why would you do it to lose money? Because you can see Twitter loses money. How are you going to do any better unless you get backing from Wall Street to go in and get carte blanche to lose money? But it's going to be less likely that Wall Street's going to back you to back a company that doesn't make money to have another one out there. And that's really where the economy is totally screwed up, because you would think that the way to attack these monopolies that are out there, you would think the way to do it is just go and compete against them. But it's very difficult to do that. And it highlights that these companies have agendas other than making money. They don't have to make money. That's almost like they are making money in their mind because they're collecting stock appreciation rights. So they're making a fortune, even though the company isn't making money, and the shareholders aren't complaining because they're making money because the share goes higher.
Well, Twitter's had the stock crash a number of times.
Yes,
Twitter, unlike Facebook, after IPO, it crashed initially. It was $30 a share. I was working at Investing Daily as an investment analyst, and I saw they were transitioning well to mobile. My bosses didn't agree with me. I said the stock was a good speculative buy at 30. It's at 130 now. That was 4 years ago. So,
but it shouldn't be. All these companies, even Facebook does make some money, but these companies that are out there that are running almost a social justice campaign. Oh, well, and they are, because if you think about the past
censorship campaign, yeah.
Yes, if you think about past monopolies, IBM, Microsoft, eBay, the reason they have monopolies is because they have network effects. Everyone's on the platform, and everybody wants to be on the platform because everyone's on the platform. It's very hard to break that. But these companies today are chasing people off their own platforms.
Oh, yes.
And that doesn't make any sense, because if you're Starbucks and you basically say, I'm taking a stand here, I know half the country or more than half the country supports shutting down the borders, but I'm going to hire immigrants or refugees or whatever it is, or Twitter or Facebook says, I'm going to shut down basically alternative media, which is probably on YouTube, is probably 80%, maybe 90% of their views. I mean, alternative media is what is the reason people are on YouTube. You want to watch TV, you don't go to, you want to see CNN, Fox, all that stuff, you don't go on YouTube.
Yeah, Alex Jones has a top 5 channel on InfoWars, and I heard they just took away about $5 million a year in his revenues, so those are gone.
Right, and if you think about that, that is not how a monopoly keeps its monopoly. A monopoly keeps its monopoly by attracting more people to the site and making more people want to go there and not booting people off the platform. So that's where we are right now, which I think is disturbing, but I also think is an opportunity. Is normally in the past, a company like Microsoft, when it was a monopoly, it tried to shut anyone else from trying to even use an alternative platform. Java came out, they squashed that. Netscape came out, they created their own browser. They didn't want anyone else using anything. Here you got Facebook and Twitter trying to get rid of people. You have YouTube trying to throw people off the platform, trying to have fewer views, fewer people on. And I think that the free market should be able to take care of that, because if you want to not provide what they want and provide, your vision of how you think the world should be, which is no fake news, well, if the market wants fake news, however you define it, even if it's not fake news in the real sense, but it's what they call fake news, someone's going to cater to fake news. I mean, it's just like with Starbucks. If people don't want a lecture when they get their coffee, they go to Dunkin' Donuts. But the problem with these technology companies, it really isn't a viable alternative, because, again, everybody wants to be on YouTube because as a content provider, you want to be there because that's where all the viewers are. And all the viewers are there because all the content providers are there. But it seems like YouTube, Twitter, Facebook are trying to get rid of all of that reason to go there.
Yeah, I have disclosed this publicly. I don't know about you, Louis, but they've screwed our channel over a lot. Our analytics since June of 2006 are down more than 80% across the board. We're making about $600 a month in ad revenue from YouTube in 2016, and that money is basically all gone. So they've taken it away. They've taken away a lot of our views, and we've brought in, a lot of interesting guests. The content it's not like we haven't been releasing content.
Right.
It's not like we haven't been having quality guests on, and yet our analytics and views are down across the board. And we've been trying to cover a lot of different topics. So, it's very frustrating where we should have been over 20,000 subscribers already. The pace we were going on was almost 1,000 new subscribers to our channel a month. We were growing that quickly for a while in 2016. And then it's basically like, someone drove like a sports car at 60 miles an hour right into a brick wall. That's what I feel has happened to our channel now on YouTube.
And what YouTube is doing, I guess they think, because they have this platform that's almost unassailable and people want to be there, that people will just redirect their attention away from your site and other sites that they deem not to be valid, and just push it towards where they think what people should be looking at. And I think that's the mistake, because they're underestimating the fact that I think if somebody's interested in looking at your site, they're not going to be able to redirect them to CNN. I don't know how they think that that's going to work. Now, with respect to my site, there's really not much you can do because it's not that big, and it's kind of under the radar. So once in a while I get a YouTube video that gets put into like recommended views, and it gets a little extra. But normally I have, a small subset of what you have, and I have like 1,600 subscribers, and I get between 600 and 1,200. That hasn't. It just grows small, so there's not really much they can do, because I think the size of my audience is small enough that they see it, they look at it, and I also have a site that's probably got more subscribers than the YouTube. So that's how I kind of keep at my level. But I'm not going to grow from there. I mean, YouTube's not going to promote a gold and silver channel, and I don't even, and you don't either. I mean, you and I, we don't talk about Pizzagate or all that stuff, and those are the sites that are really getting hit.
Well, what's funny is they are hitting them, but they're also still getting a lot of views on them. So they may be demonetizing those videos, but the videos are still getting a lot of views. But then, they start to shut down the PayPal accounts. They start to shut down they freeze bank accounts. They freeze Patreon accounts. The
other thing is, people want, you see, the difference is, like, I don't want to undersell what I do, but people will seek out the other stuff, much more. Like, if you censored Smaulgld, it's not like people are going to say, I really need to find out, what's happening with the U.S. Mint this month. The people it's not like that compelling, but when you're selling this kind of sensational story, you can demonetize them, and if they put it up, people will find it, even if YouTube tries to cover it up.
Well, did you hear what YouTube did with the Joe Rogan video with Alex Jones? They actually took that video down, even though it was the most views that Joe Rogan has ever got on his YouTube channel. So people who had ripped off the audio and the video and were putting up the video on their own channels, because when they heard it got taken down, they wanted to share with other people. They're like actively pulling it off of their channel, of other people's channels too. So I think the only copy of that is on Joe Rogan's website now, even though it got over 5 million views, I think, in a week.
Now, that's just stupid business. Now, the thing is, from a law perspective, you cannot sue somebody for being foolish in business, because they have the right to run their company into the ground. And you would think that if they are taking away the most viewed video of all time, other than Gangnam Style, I guess, they're going to lose money, but that's their prerogative. But it seems that their interest, just like the Washington Post, the New York Times, is more political. It's more for an agenda than it is to gain readers or to gain views or whatever. Now, there is a fine line between just being clickbait, but that eventually wears itself out too. And again, the market takes care of that. If you put up a lot of this must see type of video, you might in the beginning get a lot of, or the world's going to end tomorrow. The more you say that, then you're naturally your viewers are just going to drop off. So YouTube doesn't need to censor that kind of stuff. And if there is illegal activity going on, clearly they have a right to throw that off the channel, or if they think someone is going to start a riot or someone's making death threats. But they're basically saying we don't like the character of the content.
Well,
we don't.
It's hypocritical though, Lewis, because they allow, like the social justice warriors and ISIS terrorists and, militant Black Lives Matters people who say they want to, murder or kill white people. They allow those videos to stay. And yet, they're taking down others. So they're picking and choosing.
Correct. Absolutely. They are picking and choosing, and they're not doing it in a business sense. They're doing it from their own personal political sense. And they feel, I believe, they're immune from the dictates of the market because we don't have a market. The problem is when you have companies, I mentioned earlier, when you have a company that doesn't make money and it says it's not going to make money, and that doesn't bother the markets have been conditioned. Just like with Cheney and, deficits don't matter, profits don't matter. And once you're in a position where profits don't matter and you could just sell your own brand of whatever you want and you get people to believe it, I have to blame, people losing the concept of value. Why would you buy a share in a company? I get it. It goes up. But if you did your analysis, you'd say there's no reason it should go up other than it does. I mean, the way you invest today, you just look at charts. You say, okay, that one has momentum. I want to buy that company. Well, that company doesn't make any money. Never will. It doesn't matter. Look at the chart. Look at that chart. Yeah. It's going up.
Yeah, there's no real price discovery, and that's what leads to value. But, there's not even a lot of human beings, Liz, trading the markets anymore. Most of the volume is these, HFT algorithms that are programmed that if this stock chart crosses in a bullish way over the 200-day moving average, it's a buy. If this stock chart crosses underneath the 200-day moving average, it's a sell. So and it doesn't give a shit about any of the fundamentals, really. Right. Maybe if there's like a big earnings beat, it's an automatic buy, or there's a big earnings miss, it's an automatic sell. But in general, it doesn't really care about the fundamentals because, long term, it's not a long-term viewing mechanism anymore.
And all this capital has become available to companies that really don't know what they're doing, don't know how to make a profit, don't care to make a profit, because people have nowhere else to put their savings because there's no interest.
Lewis, if you're a CEO now, this is the problem with the system and why the incentive structure is perverse. And you said, it's not perverse, I say it is. But the incentive structure is broken in society. So if you can get rich quick, if you're a CEO of a company and you know that if you can goose the system, trick the earnings analysts, fool the investment bankers will help you pump the stock after the IPO like Snapchat. If you know you can trigger your stock options in 2 or 3 years and make enough money to retire, why do you care what happens to the company 10, 15, 20 years from now if you spend the money on research and development and create new products or services? So that's the point I was trying to make about how, the fundamentals incentive structure is broken now that, people aren't thinking, well, I want to make sure when I leave this company that we're set for the next 10 or 15 years, that we have the best research and development, that we have a whole product pipeline so the company can, grow revenues, grow earnings, keep margins the same or grow them, things like that. People just don't think that way too much anymore.
And okay, here's what I was saying. We're agreeing, but I have a distinction here. I'm saying that the financial system and the system of rewards in the marketplace is perverse. And given such perversity, the compensation system makes total sense and is not perverse. That if the people that are running these businesses know, not just for a year or two, but for 10 years this has been going on, that you can set up your business with the idea that you're never going to make any money. What you're going to do is drive the share price higher. Well, and if you can do that, and if that's what the system is rewarding, then the compensation system is not perverse. It makes total sense to go in there and basically bump up your stock price and buy back your shares, do another secondary offering, get more cash, buy revenue, get the stock price increase, do another offering, buy back some more shares. The system is perverse, the financial system, but the compensation system only reflects the perverse system. It actually makes total sense that they are rewarding these people to do what they're doing, which is to make the stock price go higher. The perversity is in the whole system that rewards that. Because you and I, if we ran a company, we'd be foolish trying to make money if the stock price wasn't going to be rewarded. If they rewarded us for making revenues that lose money, that's what we should do. And we should buy back our shares, and we should borrow money to do so. So the point is, it used to be, if you think about Austrian School of Economics, the whole bubble cycle is that interest rates are low, right? I know you know this, but for our listeners, when interest rates are low, entrepreneurs are tricked into making malinvestments because they don't realize that this is not a real economy. There's really not the demand there. They've been tricked into making the investment. And then eventually the market realizes there was nothing ever there. It ends in tears. And now you have to liquidate the malinvestment. What they've done the last 10, 15 years is the malinvestment never gets liquidated. So when entrepreneurs come in and they're not tricked anymore, they know that the Fed has its back. They know that interest rates will stay low. They know that if interest rates are low and a problem occurs, they'll go even lower. They know if there's a problem with interest rates, the Fed will just buy shares, or the Swiss National Bank will buy shares. So the compensation structures are reacting to the perversity of a financial system that doesn't have a natural rate of interest, that actually intervenes in the market, participates in the market, and that's what screws up the concept of value.
Yeah, those are great points, Liz. What I was saying, though, for the 1 or 2 years, I know this has been going on a long time, was that, let's say you got hired as CEO of a company where the stock price was languishing, you could go in and turn around the company in 1 or 2 years and trigger your stock options packages, beat earnings every single quarter for 2 years in a row and retire, walk away with a golden parachute. That's what I was saying. So you could go in there to a company where the stock price is going bad, say, you know what, we're going to take on a bunch of debt. We're going to do acquisition after acquisition after acquisition to goose revenue. I don't care about the margins of the companies we're buying. I don't care about free cash flow. We're just going to grow revenue, and we're just going to, you're going to tell your CFO to do what he's got to do with the accounting tricks and the financial engineering to beat earnings. And 2 years from now, you're going to walk away with, $30 million in stock options and a golden parachute. And, the company in the long term is going to be worse off for it because the stuff it bought, it's going to have to write down or sell for pennies.
Yeah, that's true if you're actually looking at fundamentals. But there's other ways of driving the stock price higher that are less damaging. You don't have to take on debt. You can do what I was mentioning. You could just buy revenue through excessive sales and marketing. But again, that's still a function of, for those 2 years as the stock price is rising, most shareholders don't, if you invest in a company, most shareholders don't invest for more than actually, with the algorithm trading, it's a nanosecond how long they hold the shares. But individual investors or even funds, they don't hold shares for 2 years. So if that guy comes in there and does that, everyone makes money if he manages to drive the stock price higher. And that's a system. That's the financial system and the market system that's perverse. He's only acting in the best interest of the company based on the screwed up system that's going to reward him for doing that. Because what he's doing, if you look at it and you say, well, it makes any sense. Those acquisitions don't make any sense. Taking on debt doesn't make any sense. He's not got free cash flow. You wouldn't buy the stock. But he knows, as the CEO, that people are going to buy this nonsense story.
That's an excellent point. And, to add to your points there about gold and silver, there's enormous profits in manipulating gold and silver. Deutsche Bank made many billion, and the other investment banks made many billions of dollars manipulating gold and silver prices and mining shares over the years. And yet, the amount of fines they've had to pay are very small.
Right.
I think the banking industry...
It's their business model.
Well, the banking industry, Lewis, as a whole, I think they've been fined over $300 billion, which, compare that's the size of almost like Johnson & Johnson or Kimberly-Clark. That's how much fines the whole global banking industry has paid since 2008. I
did a chart that showed that J.P. Morgan has paid more in fines, twice as much in fines, than the annual amount of of silver mining production is worth. So I think they paid like $35 billion worth of fines over the last 5 or 6 years, and a year's worth of silver only cost, $18 billion.
Yeah, so
That's crazy.
the people. Well, it's really easy for J.P. Morgan then to go out and buy the physical silver then,
Right.
since they've been manipulating it down to accumulate it. They can manipulate the short side of the market with paper futures contracts, accumulate the metal cheap, and they're out from their short position, which is what Ted Butler has and David Morgan of the Morgan Report has speculated they've been doing for the last few years as they keep the silver price down. So I mean, the incentive structure in the markets, the financial system definitely is perverse. It's not just a gold or silver market; it's so many other different things right now.
And it leads to things like companies making perverse decisions, like offending the people who use their platforms, throwing off content providers, pissing off the people that watch the content providers. It wouldn't make any sense in a normal market because the market would punish those companies. But the thing about these companies, they're not going anywhere. When you raise so much money in a IPO and a secondary, and you have on your balance sheet hundreds of billions of dollars, you could sustain losses for the next 30 years. So they don't care. And that's where they become the vehicles for something other than profit. They become something other than businesses. They're there to effectuate social change or to effectuate political change. They're not there to run a business.
They're there to maintain this cartel status quo system with, industries are controlled by a handful. So many different industries in the United States and Europe are controlled by, a handful of companies. It's a sophisticated version of fascism.
Right. And normally a monopoly can be
one company. Yeah.
Yeah. Well, or monopoly can be attacked by trying to provide a superior product or service. But the thing about a monopoly is it generally tries to hold on to its monopoly by keeping all of its customers. It seems here in the examples we're using with Facebook and Twitter, they don't care.
You know what's changed also with the monopoly system is how the patent office in the United States has become. So now basically it's about if you control the IP and the patents, you basically have a monopoly, because then you've strangled competitors, when they're babies in the cradle.
Well, what I don't know, and I haven't looked into, but it's an interesting point, is whether setting up something, and I don't think there's anything sophisticated about Twitter or Facebook, but the question is, can you set up these alternative social media platforms? YouTube. I mean, what's YouTube? You open up your servers and you give people an account and you let them load up stuff. I don't know, other than
I'm not technical.
Well, what I'm saying is
I'm not tech savvy at all.
But other than money, I mean, why couldn't anybody, and this is the Chicago School theory of economics, is that money should not be the stumbling block to attacking monopoly, because if there's monopoly profits to be reaped by a company like Facebook and Twitter, and we know there are monopoly profits, this is the point, but if, let's say, they were running this massive monopoly and somebody thought they could compete with them, all they need is money. Well, the money would be there because now you have a chance to compete against a company, and if you're successful, you're also going to reap these massive profits. The way it's set up now, which is why it's very hard to attack monopolies, they're not making money, or they're not making ridiculous amounts of money, they're making stock price money. And it's very hard to get into that game if someone's already there. Whereas you can compete, and you and I'm saying I could do this, but someone can compete against Facebook, can compete against Twitter, can build an audience, lose money just like they lose. But why would somebody do that? Unless they had a political agenda. And then again,
well, they would need some money to support them. So first of all, the Twitter guys are getting paid, so they have salaries, they have stock options. So even though the company is losing money, the guys are still getting paid big salaries.
Exactly.
But if you're trying to build a competitor,
and they're also getting, even though their stock price is down. Remember, they got their share prices at much lower when the company started.
Yeah. Oh yeah. Oh yeah, and Facebook, was paying people initially. I think the guy on the mural on their campus building for Facebook, their first campus building, he got a choice of getting paid a small amount of cash or shares, and his share position when Facebook went IPO, I think he made $100 million, and he would have only made like 20 grand in cash. but in shares he took it and made 100 million.
Right.
And that was just for.
And that's the game today. And people don't properly value shares. They value them. I don't know. What are they valuing them on if there's not a profit and there's not even an intention of making a profit? If somebody said 30 years ago, you were in Snapchat, if such a thing could have existed back then, but it couldn't, and the CEO came out and said, I don't know, we don't make a profit. I don't even think we can. I remember when I was a lawyer, you had to have a couple of years of profit under your belt before you'd be considered by the bankers to take you public. Makes sense, because no one would buy a company that didn't make a profit and didn't have a track record. This guy comes out and he says, I don't know, we just make this thing and people use it and the picture goes away after they use it. And how do you make money? Well, we don't. We probably won't. Oh, okay. So we'll value the company at X billion dollars.
Well, it's got user growth. Snapchat has user growth.
But so what?
The thing is.
But so what?
These popular products, though, Lewis, people think eventually they can figure out a way to eke out a couple pennies per customer.
But we've seen now some of these top sites still have yet to eke out a profit. And for the period of time, you could have bought Zillow for the last 10 years and you could have been cussing and swearing they haven't made a profit, but you're not cussing and swearing because the company share price just keeps going up.
Welcome to dystopia, right?
That's what it is, because I get the point where you should be able to invest in a company pre-profit where the company has a potential, it's going to grow its user base, it's going to monetize the base, and it's going to eventually be profitable. But when they come out and tell you it's not going to be profitable, and you've seen other companies out there in the space and they're not profitable, why do you need more of those? Well, the reason you need more of them is because there's a demand for those types of companies.
Why do you think
there's less of demand for profitable companies?
Why do you think they're disclosing so far in advance that they're not going to be profitable? You think they don't think it matters, or they don't want to be sued then?
Both.
For saying that they didn't warn people?
Both, because if they were really concerned that it mattered, they wouldn't say anything, and they would put in something like, we don't know. They know it doesn't matter at all. And they'll also get to cover themselves if they don't make money. And somehow, what I'm hoping for one day, when the market collapses and people decide, okay, the only companies we're going to buy in the rebound is not everything in the Russell 2000. Not every company, but only the companies that look like they can make money and continue to make money, and we'll value those fairly. And the rest of them, they can go out of business for all I care.
This has been a very interesting discussion. These weren't the topics I had planned, but this is a very interesting discussion about what a lot of the America's leading technology companies has become. Lewis, in the remaining time of the interview, since we're already over 40 minutes, I want to ask you your thoughts on the gold and silver market. Bitcoin now is at parity with gold. Bitcoin's not manipulated. Gold and silver are very heavily manipulated. We discussed this earlier in the interview, how profitable it is to manipulate the paper price of gold and silver down, to manipulate mining shares down. Are you surprised that Bitcoin is at the same price now as an ounce of gold?
No, and the reason is that Bitcoin has become something that I didn't anticipate it to become. If you remember, the hype around Bitcoin was this magical system of payments. And it was flawless. It was based on math. There was a limited number of Bitcoins, and people were going to adopt it, and people were going to take Bitcoin, and the velocity of the trading of Bitcoin was going to drive up the price of Bitcoin, to which I said, no, it's not. That just means people are going to sell it. And what's made Bitcoin go higher is the hoarding of Bitcoin and the attractiveness of it versus fiat currencies, especially when you have things like what's happened in India, where it totally highlights the point that an issuer, even of a major currency like the rupee, can come out and say, those rupees you have, those trillions of dollars or trillions of worth of rupees, they're not worth anything anymore. So, you can just take your loss, or you can come to the bank that we tell you to come to, which may be 70 miles from your house, and we'll give you new notes. Oh, we might not have enough of those notes for you. So maybe you can open an account and you could put those old rupees into the account. We'll give you a card. And then you realize, wow, you can't even count on your own issuer, your own cash. And that's when you look at Bitcoin and you say, yeah, I know Bitcoin is a digital abstraction, but no one can take it away from me. They can steal it from me, but there's no Bitcoin issuer that can tell you, you know what? We don't think it's worth $1,200 anymore. So why don't you just that's shocking
Yeah, it's not controlled by a government in the sense that the government could say, like in India with the demonetization scheme Modi said, where all of a sudden, a week from today, 90% of the physical cash supply in India is going to be worthless. You have to go wait. There's videos out there on YouTube where Indians have been waiting over 24 hours
right.
consecutively in line. People didn't have money to buy food. And, a lot of India's economy is very rural. A lot of people don't have proper education.
Or bank accounts. Half of them didn't have in the rural areas, 60 didn't have bank accounts.
Yeah, or proper education, or even electric. I think 50% of the country, Lewis, still doesn't have electricity. Jayant Bhandari, who grew up in India, he's a libertarian. He says that the average per capita income in India is only $1,700 per year. So it's almost like the government was using this as a lab experiment where they knew it wouldn't work, and yet they didn't care.
Right, and then if you look at China, that's real. Now, the other thing I didn't anticipate was that China would become where the trading happens. And China is basically, Bitcoin did not pick up in the United States as a medium of exchange. Very few places accept Bitcoin. You can find them, but it's not, people don't obtain Bitcoin, so it's easier for them to go into a store and buy coffee. That's not why you have Bitcoin. What Bitcoin is right now is a store of value, as strange as that may sound, because its main feature wasn't just to be sitting in a cold storage or in a vault. It was meant to be used. It was invented as a currency. It was meant to be a payment system. And now, actually, they're having trouble with it as a payment system. It's slowing down a bit, but you're seeing massive trading of it in China, and a lot of that is just to stay out of the yuan and is to protect their capital, and is to a certain extent, I'm sure a lot of people have it for secrecy, and also for expats if they want to travel, they want to get their money out of a country. That's Bitcoin is a good, and so that's where the value in Bitcoin has come from. It hasn't come from being a global payment system. It still has those capacities, but I don't think that's where the value is.
It's acting similar to how gold and silver would in the past, although now, at airports there's metal detectors, so you can't move gold and silver across the border as easily as you could in the past to avoid taxes or escape a country, like, what happened in Nazi Germany, how a lot of Jewish immigrants were able to move with gold, silver, and diamonds. They were able to move some of their wealth and not start over with zero when they went to another country to escape, persecution. So Bitcoin is kind of filling that in right now. Great points about China. China has VAT taxes on a lot of imported items. So if you don't want to pay that, you can skirt around it by paying Bitcoin maybe online, or there's capital controls in China on certain things. I think you're only allowed to take around 200. India has them too. I think you're only allowed to move $250,000 per year outside the country if you're high net worth. And then China also has their central bank did a devaluation.
Right, and also India has a tax duty on gold of 10%. The jewelers had a 5% surtax. So they've made it hard to transact in gold and silver. They're trying to get you away from it, and they can always come, and they do. They could do door knocks and say, okay, we want to see whether we're going to tax your gold and silver. We want to see how much you have. It's very hard to ask somebody, do you have Bitcoin? And you say, no. All right. They can search your house. They can search your computer. They're not going to find it.
Yeah, there's so many there. Well, it's not completely hideable.
No, it's not. But I guess if you're storing Bitcoin, and I guess if you bought it on an exchange, they can track that. But it's less physical search, and you can get around it. And they are trying to clamp down on it. But I think the rise of Bitcoin has been the fact that it's limited. And the other thing is, the longer it stays around, the more value it has. Because when it first came out, people were thinking no one is into this, no one's going to like it. The fact that it hit its 1,000, and I thought that would be the end of it. When it started going down again, I thought
I knew that.
But now it's there. I mean,
I knew that wasn't the end of it, because I know in the long term, Lewis, right now you said it's not being used to buy a cup of coffee. That may change over the next 5 or 10 years. There's been over $1 billion invested into it by Silicon Valley, Wall Street, large corporations in adapting testing systems. I know a lot of my contacts who work at large Wall Street banks who are libertarians. There's a few libertarians who work on Wall Street, and there's a large email list of libertarians working in finance. And, they tell me that their banks are testing blockchain systems now. So they're not going to switch over immediately, but the banks know that long term, their blockchain systems for certain accounting things are going to save them a lot of money.
But blockchain systems don't necessarily translate into demand for Bitcoin or even have anything to do with it. They can set up private blockchains. You can use blockchains to verify contracts.
It's a good piece of technology, though.
Oh, absolutely. And it's going to be around. And I think because they're small, you don't really even need the advantage of Bitcoin is you don't need that many people to be interested in having it. Most people are not interested in Bitcoin. I mean, if you think about how many people and how many people have used it or have it, I have a little of it just because people have donated to me. But most people do not have it or are not interested in it. But it doesn't matter. There's
I've tried.
There's so few Bitcoin that the price is going to go up, even if you have moderate interest. There's 5 billion people on the planet. You don't need that many people to be interested in it.
Yeah, I think mostly tech-savvy people are interested in it. There's some speculators that are not tech-savvy that are chasing it higher because of the stock chart and the price.
Right.
But most of the people who own it are tech-savvy. So people like my dad who are not super tech-savvy, they're not, I've tried explaining it to my dad, and he's not really interested. He was like, oh, it sounds like a scam. So when I tried explaining it to him, it's too difficult for him to comprehend. He was like, oh, I'd just rather have gold or silver or cash.
Yeah, but if 95% of the world think it's a scam and only 5% really like it, that's hundreds of millions. I mean, that's
still a big market.
That's a big market. And the thing about Bitcoin is there is a global infrastructure of people who get it, understand it, like it, and believe in it. And that's you don't need to have the whole country believe in it, because if everybody believed in it and wanted it, it would be over $1 million a coin. I mean, it's just not enough of it. Now, the thing about what they've done with gold is, even if far more people want gold than Bitcoin in the world, that's for sure. I mean, the amount of Indians, the tens of millions of people who own gold dwarfs the number of holders of Bitcoin. It's just that what they've done with gold is they've made the supply of it so big by doing the leverage on the paper trading. Because I read a statistic, it's something like 10, 20, 30, 50, whatever it is. It's the amount of gold that's traded in a year. It's not gold that's traded, dwarfs the amount of gold that's mined in a year, it's mined in 20 years. So they've made the supply of gold and silver, even though they're finite, into almost being infinite because of the amount of paper trading they allow and the leverage on it.
Yeah, and then no hedge fund takes delivery of their paper trades.
Right.
So yeah, that's how they've been able to keep the system, and then they cash settle with people if there's too much demand for physical metal delivery. So they figured out tricks to how to keep the metals price suppressed with the paper market. I think it's over 90 times leverage with physical gold, and I think it may be even more than that for physical silver.
No, that's right. It always changes, but the point is, I read this CIA memo. It wasn't a CIA memo. It was a WikiLeaks memo from a guy who was working in, I think it was in the State Department, when they were going to re-legalize gold to have at the end of 1974. He wrote a memo in 1974 just before this happened, and he said the futures market takes care of hoarding because it pushes people away from wanting the physical metal. All they really want is exposure to price. They're not going to take delivery, and that's how they manage to keep the price of gold down, because the demand is not for people buy gold. They think they're buying gold. They want the price protection. They don't want the gold. Now, there are people who do want the gold, but you don't have to have it if you have the price protection. And because they know that the price protection is based on a price that's in the futures markets, they almost know that it's a losing bet to buy gold and hold it and store it, other than in a catastrophic circumstance where you actually need to use it. But how many of those catastrophic circumstances have we had over the last 100 years?
Well, we have a global since the dollar went off gold backing in 1971, we've had a large global financial crisis about every 7 to 12 years now.
No, well, we have, but the question is, if you had held paper traded gold during those years versus physically stored gold, would you have been better off or worse off holding the physical versus the paper? And the answer is no difference, other than the nuisance and the storage charges of holding the physical. That's what they've managed to convince you, because the physical doesn't control the price, the paper does. And if that's going to be the case, then you're not really harmed buying the paper. Other than you don't get the insurance factor that if there's a total collapse, you can't get your metal.
Okay, well, if you had bought a lot of, say, 1 ounce gold coins, gold eagles, or gold buffaloes when it was $35 an ounce, and, let's say you had inherited them from your grandfather or grandmother who had passed away, yes, the gold price wouldn't have kept up with the real inflation rate, which the government's inflation rate, gold price adjusted, should be at least 2,700.
Right.
But you'd be a lot better off than have holding that cash.
No, but my question was, and this is what they've managed to do by creating these gold substitutes through now ETFs. There has not been a actual example where you are better off holding physical metal than holding or trading COMEX contracts or ETFs, because
they make it a pain in the ass to get the metal if you're trying to buy a large amount of it, because then you have to pay insurance costs,
right?
And the bank might not even have the metal, and they're charging you the fees,
right? And
the storage and insurance costs.
And there's no premium on the physical, which is insane.
Yep.
In other words, because the price is what they say it is in the paper, and let's say you have, a big kilo bar and you want to go trade it, they're only going to give you, and then you have to go and find somebody to buy it, to assay it, and you're going to have to pay a transaction charge. Whereas if you buy GLD, you don't pay anything. You hit a button on your Charles Schwab account and you sell gold, so to speak. It's genius what they've done, because it's not like there's an example where you've been better off holding the kilo bar over the last 40 years.
Yeah, it's unfortunate. Well, I think there's some limits to how much they can't defend with their manipulation with this paper game. They can't defend a specific gold and silver price forever, especially when all these central bankers all want, lower devalued currencies, and they're fighting each other with exchange rates, at least to a certain extent. No one wants a strong currency. Trump doesn't want a strong dollar.
Right.
No one really does. So, the miners who have gotten, absolutely pummeled. They're very poorly managed in general across the industry. There's some exceptions, but most of them are extremely poorly mismanaged. Now you have a situation here where, have you seen these Bloomberg articles that have come out? There was one in December. Bloomberg said basically that almost all the primary gold miners were almost out of all their economic gold reserves at current prices. So in 5 years, Bloomberg with their analysis, was projecting that most primary gold miners would run out of economic reserves, and they were going to have to replace the reserves. The problem is it's going to cost them a lot more and a higher gold price and a lot of investment capital they don't have to replace the reserves. And then there was a new Bloomberg article this week saying that from the Franco-Nevada CEO, and he gave an interview saying that, he's apprehensive to invest too much money into any new gold mining project, because almost none of them that are, reasonably large are economic at current gold prices.
Right.
So they need a much higher gold price, 1,500, 1,600 minimum, to be economic, to bring on any future new gold mining supply to replace the current amount of gold production, current amount of gold reserves.
Right. And
so I think...
I was going to say,
sorry, I'll let you speak now.
The only gold that people really need, because investors are satisfied with this paper nonsense, okay, is for jewelry, because that actually gets used.
Well, maybe part of that's a large chunk of the retail demand, and there are stackers for physical metal. A lot of the physical gold demand, though, is from central banks and very high net worth people.
Hold on, central banks, though. There's only 3 central banks that are buying any gold over the last 20 some odd years. They are, in order, Russia, China, and Kazakhstan, and they have domestic production that they throw straight into their vaults. So the rest of these miners are satisfying the rest of the demand. They're not satisfying a central bank demand. That's what they keep saying, central bank demand. It's only those 3 banks. For the last 15, 20 years, England has sold gold. Switzerland has sold 60% of the gold. The U.S. hasn't added any. Germany hasn't added any. India hasn't added any. Italy hasn't added any. France hasn't added any. Canada has no gold. So the central banks are not adding gold at all, other than Russia, which is basically turning its rupees into gold by buying the domestic supply. China is importing gold, is taking the 500 tons that it makes each year out of its domestic mine, bringing it into their reserves and across the country and other banks. And Kazakhstan is buying up a bit of their reserves. So the real demand, physical demand for gold, is limited to supposedly going into ETFs or investment demand, whatever they have to deliver on LBMA and COMEX, and whatever people want in jewelry. And that's the number one demand. And so
there's also a lot of demand for well, in China there's coins, bars, kilobars,
yes, there's more
4 nines,
physical demand. There's
kilobars.
more physical demand but again, China gets that, they import that. But in general, the thing about gold is, as a financial asset, people have been satisfied, and they clearly allow this to happen. You have the amount of trading dwarfing the paper value, dwarfing the amount that's actually available. So, they could be trading around 1 ounce of gold. If people think that the price is whatever they say it is, then that's the price. Until people actually need for physical demand, for jewelry demand, or for industrial demand to actually have the physical, the paper price will always control. That's how they have it set up. But if there's an actual shortage, and I always say this, that you cannot run a solar panel on a COMEX contract.
Yep.
You cannot you can't use the paper when you actually need the physical. You can't make a ring out of an ETF, a silver ETF. So unless that happens, they have kind of a firm control on the paper, because they can always issue more shares, and they can always short sell it, so that there appears to be more silver or gold available, and that drives the price down. That's unfortunate because, and the other thing is, your gold and silver bullion dealers, they short every time they buy, other than I think SD Bullion, who matches its trades in physical, because whenever a large buy takes place at a place by an online bullion dealer, they immediately sell short the amount, because they make their money not on whether the price of gold or silver goes up, they make it on sales per unit. So they really don't care if the price of gold or silver goes up.
Well, a lot of the bullion dealers, their margins are thin on regular bullion, like American Eagles or regular coins like Buffaloes that are from private mints. They make the extra margins on numismatics. So, they do bait and switch, and some of them do bait and switch and things like that. Their biggest margins, though, at a bullion dealer on the numismatics.
But the thing about numismatics, and why a lot of bullion dealers don't promote them, other than, like you say, sometimes unscrupulous ones, is you can't hedge that as well. So they have to go for volume to even at the low margin, because let's say you buy, I don't know, some special coin for $1,200. You've got to sell it for higher, but if you can't, and you have to sell it for $800, you lose the $400. But when the price of silver goes down and you've bought 500 monster boxes of silver, you don't lose anything when the price goes down if you've properly hedged it on the COMEX. And as long as you sell those 500 boxes, not at some kind of discount, but at the then price, then you're covered and you make your profit per coin or profit per box.
You've explained the bullion business well for our listeners who are not aware. I think, Louis, in about 5 years, because we've had a lot of silver mines, primary silver mines that were brought online from 2009 to 2012, and now here we are in 2017, a lot of those reserves have been produced even though the silver price was falling. I think we're going to have to, for a lot of these primary silver miners to stay in business, we're going to have $25 to $30 an ounce silver.
Absolutely.
In the near future, and that's just to replace reserves to keep the production numbers the same. Otherwise, silver mines are going to close.
And there is silver demand. There's the solar demand that's increasing. There are stackers. There are people who use silver in industry. I just saw Endeavor is a good example. They just released their earnings today, and they showed a profit, but they also showed a big decrease in silver mining production. And they had made the smart decision while a couple of years back the price was too low. They were going to shut down stuff. Now they have to start to restart these mines, but if they had also managed to run their business for a while, and you talk about where you high grade, you take the easy stuff first, it's now difficult for them to go back and either restart their mines, or they're going to have to go and find something that might cost them more money to get an ounce of silver out of the ground.
High grading the mines, Louis, it buys you time. So it kept the silver miner from going bankrupt, while the price was falling for the last few years. But long term, it means that the project economics that the miner released, saying the mine can run at a profit for 10 years or 15 years, it's totally screwed those up.
Yep.
So the longer they high grade in the short term, it saves the company. In the long term, it screws up the mine.
Yeah. So I think that actually, that if you're thinking about supply and demand, hopefully at one point it's going to apply. It'll probably never apply as much to gold as it will to silver, because gold is It's
a ton of it above ground. Yeah.
And it's also, and it's not needed in the same respect that silver is needed for industry. So the Canadian Mint called that a floor on the price, that there's always going to be a demand for silver to be used, whereas gold, people can use other financial assets to satisfy their need for financial protection or whatever it is. And again, gold then becomes a insurance against more of a catastrophe, because that's when you actually want to have it. But in most cases, even the financial crisis of 2008, you weren't better off holding a physical versus the paper.
Yeah, if I could add one more point there, there's very few new primary silver mines that are ready, that are being drilled out and move forward towards raising money in construction, that are anywhere near economic at less than $25 an ounce all-in costs. So $25, $30 an ounce going forward is going to be the new lower minimum threshold to build a silver mine, which means that a lot of new primary silver mines just aren't going to get built. All the analogy in the mining industry is low-hanging fruit, where the mine has a low capex cost to build. It's got good grades. Those are few and far between now. All across the earth that are onshore, a lot of those mines are gone. They're either already in production or they've been depleted already. They've been mined for so long, and now the costs of those are higher. So that's what we're facing. This is assuming silver demand stays at current levels and doesn't fall off. So I don't see any signs that silver demand is about to fall off a cliff, really. So
the only silver demand that fell off, we didn't really fall off a cliff. It leveled off and fell a bit last year, because if you noticed in 2012, 13, 14, and 15, physical silver demand in the form of coins went from 2005 to 2015 from being 5% of overall silver demand to almost 25%. And then if you add in the rounds and the bars of silver, they used to say silver 70, 80% industrial demand and the rest investment. That is now almost 50-50, or was in 2015, when the U.S. Mint sold 47 million silver eagles. The Canadian Mint sold about 40 million. Last year, that fell off a bit. But it's the issue with increasing physical silver demand must be frightening to the manipulators, because those people are not satisfied with a paper contract or an ETF in the same way that maybe the gold holders are. So that's a problem, because anything that's sold to a collector, an investor, a stacker, means that's an ounce that can't be used in a solar panel, can't be used in industry. And that's where I think if you get that competition for the two, that's when they'll try to really start to force you into buying your silver via ETFs and and the reason people buy silver is because it's cheap. It doesn't, you spend $20 and you get a round. And it's not really an issue, but going out and spending $1,000 some odd on a gold coin, when you can just go online and buy the ETF, people are going to spend $5 or $10 do that instead.
Well, I don't necessarily buy silver because it's cheap. I buy it because the gold to silver ratio is good. I like how a lot of silver is used in industry and a lot of it's not recycled. I like how there's not a very large above ground stockpile for silver like there is gold. Mm-hmm. I like how there's increasing uses for industrial demand long term for silver. So silver is basically a technology metal and has unique chemical properties. Gold does too, but gold is so rare and expensive that people don't want to really use it too much for industry. So compared to silver. So I think silver has long-term a lot of good things going for it compared to gold. I like them both. I just want to thank you again for your time today, Louis. We're well over an hour. I'm not sure if our listeners, we do get complaints from some of them that when we go over an hour. So if our listeners want to find your great videos on your YouTube channel or read your fine articles, how do they do so?
Oh, thank you, Jason. They go to smaulgld.com. To see the articles and the charts better. And then I also put them on the YouTube videos, the Smaulgld channel. And you can also follow me on Twitter at Smaulgld.
Mo and I are trying to raise $1,000 per month for our Patreon account. We have over 2,600 viewers per YouTube video. So if we can get most of our loyal listeners or all of our loyal listeners to donate $1 per month or up to $5 per month, which would be amazing, that would cover most, if not all, of the money that we need. So we also accept one-time donations. If you go to the wallstreetformainstreet.com website, we accept donations in cash via PayPal. Fiat, you can donate there. You can donate Bitcoin through our Bitcoin wallet there on the website, or you can donate gold and silver. We have a gold money account, and we also accept mailed donations of physical gold and silver. Thank you guys for listening, and we appreciate any and all help. Please forward it to friends. Okay, bye.